This is 2009. It's a manufacturing account. So this comes up as a question 1. It's a 120 mark question. Okay. So you're always asked, just down the bottom here, you're always asked to do manufacturing, trading profit and loss account for the year ended 31st of the 12th. So that means you need to do a manufacturing account, then you have to do a trading profit and loss account, and then part B there, you're asked to do a balance sheet as well. So we'll just always straight away start by reading through the question. So it tells us the company is a manufacturing firm and they have an authorised share capital of 800,000 shares divided into 500,000 ordinary shares at €1 each and 300,000 6% preference shares at €1 each. So this is where you get your information for the authorised amounts of shares for your balance sheet. Okay, then you're given the trial balance, so have a little look down through it and see if there's anything that you need to be keeping an eye on. You've got your factory buildings, they're standard enough there. Plant and machinery is the same. Discount, be careful of that, it's on the credit side, okay, which means that in income. So anything, I'll just label the top, anything that's on the debit side is either going to be an asset or an expense, and anything on the credit side is either going to be a gain or a liability. Okay, so if you're looking at anything in the debit side, automatically you should know it's either going to be an asset or an expense. And similarly then with the credit side, you should know it's either going to be a gain or a liability. Okay. You have 3 stocks. So you've got 3 stocks in manufacturing accounts, whereas you only have one usually with either a sole trader or a manufacturing account. So finished goods, that's the one that goes into your trading. Okay. Trading, I'll just write that there. And raw materials and work in progress, they go into the manufacturing. Okay, so just make sure you know that. Then you've got your sales figure, that's standard enough, 1,085,000. Patents are your intangible fixed assets. Then you've got carriage on raw materials, that's going to have to go into the manufacturing account as well. Hire of special equipment, that's a manufacturing account, and that's actually a direct expense. So make sure you're putting that in as a direct expense. Okay, you need to put that in as direct, because that without that piece of machinery or without that piece of equipment, you wouldn't have been able to make the whatever it is you're making. We'll pretend it's tables. Okay, purchase of raw materials, that's your raw materials used for making the product. So that will go at the top of your manufacturing account. Dividends paid, they're going to come out at the bottom of your profit and loss account. Sale of scrap material of €4,500. You'll see that going into the manufacturing account, and when we get to that stage, it'll go in down the bottom of it. Okay, and you will take it away. Okay, because you're reducing the costs by selling on whatever you had left over. So, if you were in a business that was making tables, you would have scrap wood left over, and that would be if you sold on that scrap wood. That's what that sale of scrap material means. Okay, this figure here. Your debtors and creditors then. Debtors are in the debit column, creditors are in the credit column. Bank, you always need to check and see what side your bank is on. We've got a current liability here, so that it's on the credit side, so it means you've got a bank overdraft. Your direct factory wages then, they're going to be a direct cost in the manufacturing account. Selling expenses, they're going to go into your selling and distribution expenses. You have your 9% debentures, okay, so you need to be careful of this. We've got a new date, okay, so we got an increase of our loan on the 1st of April. So if when we get to calculating our debenture interest, we're going to have to consider that, okay. Then your issued share capital. So up the top of the question, as I highlighted already, that's your authorised amount. So that's the maximum number of shares that you can give out. Your issued is how much you have given out so far, okay. So far, we have €350,000 worth of ordinary shares sold, and we have 200,000 worth of the preference shares. Okay, so they're going to be shown again in your financed by section. General factory overheads, they're going to go into the factory overheads in the manufacturing account. So anytime you see factory, that means it's going to go into your manufacturing account. VAT is on the credit side, which means it's going to be a current liability. Then we've got debenture interest paid for the first 3 months. And most of the time in these questions, you're going to have a working on that. It's usually your suspense working. So you won't end up putting the 175 in. You might end up putting a different figure in. Okay. And then we've got administration expenses. And look, there we have suspense. Okay. So we're going to have something that we need to adjust. Okay. So this 22,400 is not the correct figure for administration expenses. We had to use it as suspense. Okay. So now we're going to read through the workings and see if there's anything that we need to be looking out for. So the first working is just on stock, and it's given us our stock on hand at the 31st of the 12th, 2008. Okay, and that's the same as our year end. So you can see down here, our year end is the 31st of the 12th, 2008. So that means that these stocks here are our closing stocks, okay? So our stock on hand of finished goods is 90,000, that's fine. Raw materials is 49,000 and work in progress is 26,450 euro. Then you're told that the figure for finished goods includes items which cost 5,000 euro to produce, but now have a sales value of 3,000 euro. Okay, so we made tables and they were once worth 5,000, but now they're only worth 3. So the rule is you have to include your stock at the lower, whichever figure is lower, the cost price or the net realisable value. So the lower figure here is 3,000 euro. So you need to have it included in your account at 3,000 euro. Next, you have patents are being written off over 6 years, which commenced in 2006. Okay, 6 years, but the 6 years commenced in 2006. We're doing our accounts for 2008. Okay, so that means that they already have 2 years written off already. 2 years done already. So they started writing it off in 2006. We're doing the accounts for 2008, which means they already wrote off for 2006 and 2007. So we only have 4 years left to amortize. Okay, so when you get your patents figure, you're going to divide it by 4. So divide by 4, not 6. Okay, so be careful of that. You always need to check and see what way it comes up. Sometimes it just says patents are to be amortized over 10 years, start this year. Okay, or else you might need to check out what the story is with the years. Okay, next is included in the sale of scrap materials is 800 euro received from the sale of an old machine on the 1st of the 9th 2008. Okay, so sale of an old machine. Okay, this is disposal of a fixed asset. Okay, so you have to use your steps. You have 6 steps usually on doing your disposal, so follow the 6 steps. Note that included in this figure for sale of scrap materials, okay, it shouldn't have gone in there. So the first thing you need to do straight away is get rid of that 800 euro out of your sale of scrap materials. So you're going to adjust the figure that's up here, the 4,500 from the trial balance. That's not correct because some money is included in that for the sale of an old machine, which has nothing got to do with scrap materials, okay. This machine had cost us, continuing reading here, this machine had cost us 9,000 euro on the 1st of the 4th 2005. And the cheque had been entered in the bank account. Okay, so we got the machine on the 1st of April 2005 and we sold it on the 1st of the 9th 2008. This was the only entry made in the book. So you're going to need to follow your 6 steps and I'll go through them further on in the video. The suspense figure arises of discount allowed 200 euro entered only in the discount account. So I always say you always have 2 separate problems. Well, the majority of the time you have 2 separate problems in suspense. Okay, so treat them as 2 separate things. Don't try and do the 2 of them at the same time. So your first problem is there, the one that I just read. So discount allowed of 200 euro entered only in the discount account. Okay, so discount, who do we give discounts to? We give it to our customers. Okay, so we might give a discount if someone pays us early, or maybe they're just a really good customer of ours, so we decide to give them a discount. If we give someone a discount, that's an expense to us. Okay, we put it in the discount account already. The double entry should have been to reduce the debtor. They don't owe us that money anymore, so we should have reduced the debtor, but we didn't do that. All we did was put it into the discount account. So you're going to have to correct the suspense and then register that in the debtor's account by reducing the debtor's account by 200 euro. Okay. The second problem is then posting of an incorrect figure for debenture interest paid to the interest account. Okay, so that is what I've said up here when we're going to have the wrong figure for the debenture interest. Okay, so basically what happened was the correct amount of interest was entered into the bank account. So the correct amount of money came out of the bank account. So we showed the correct amount of money in the bank account, but the incorrect amount of money in the interest account. Okay, so that's why our debits and credits didn't add up. So we had to use suspense. Okay, so that's the second problem. So label that as your second problem. Do them. Don't try and do them both at the same time because you're just going to get confused. Point 5 here now is a bad debt of 500 euro should have been written off. Okay, so that means that someone has gone bankrupt. We are never going to see that 500 euro. So you need to label the 500 euro as a bad debt. Okay, and reduce the debtors by 500 euro as well. And we would have just adjusted the debtors here in point 4, so you need to carry that debtors figure down. Then it says a provision for bad debt should be provided at 5% of debtors. I would recommend leaving that till the end, so don't do that until the end. And if you ever see that in your leaving cert coming up like that, leave it till the end. Do it at the end. Okay, I'll just do a little arrow. Even if you want to, if you're doing your exam, you could write down here, be debts provision, just to remind yourself. Okay. Next is point 6. It was discovered that goods which cost the firm €6,500 to produce, okay? So they cost us €6,500 to produce, so that means that's the cost price. They were sent to a customer on a sale or return basis, which basically means we sent them a sample and we accidentally recorded it as a sale. So you need to undo the sale, okay? It was treated as a sale, so you need to undo your sales, undo your debtor and add it back into your stock. Okay, you didn't actually sell it, it's still your product. Okay, it's still your stock, you haven't sold it yet. Okay, and you cannot record the sale before it happens. So you need to remove it from your debtors and remove it from your sales at the selling price and add it back into your stock at cost price. Okay, you are given the cost price, you're going to have to calculate what the selling price was. Okay, point 7 then, during 2008 the company built an extension to the warehouse. The work was carried out by the company's own employees and the cost of their labour was €17,000. That figure there was included in the factory wages. Now that figure should not have been included in the factory wages because they weren't doing normal standard factory work. They were building an extension. So what you need to do is take the €17,000 out of the factory wages and add it into the buildings. Okay, and similarly then, the materials costing €33,000 were taken from the firm's stocks. Okay, so those stocks, just say this is wood. Okay, those materials that piece of wood was not used in the standard operations of the business. They were used to build an asset. They were used to build an extension. So remove this €33,000 out of purchases and add it into your buildings. Okay, so I'm going to highlight those two figures. First thing you're going to do is take the 17,000 out of factory wages, add it to buildings. Then 33,000, remove that from your purchases and add it to factory buildings. Okay. Next then is your factory building. Depreciation is provided on fixed assets as follows. Factory buildings, 2% of cost at the end of the year. Okay. So you get 2% of the cost of whatever the value is at the end of the year. Okay. So that's going to include the extension that we just spoke about. Okay, then it says plant and machinery at 20% of cost per annum from date of purchase to date of sale. Okay, and that there is going to go with your disposal working, which is point number 3. Okay, which we talked about earlier on. So they're going to go hand in hand. If you follow all 6 steps, when you're doing your disposal, you'll have this part done. You'll have your depreciation on plant and machinery done by the time you get to this working. Then it says at the end of 2008, the company revalued its buildings at €800,000. So you have to do a revaluation, okay? And we'll go through that when we go through the workings, okay? Then you're asked to provide a provision should be made for debenture interest due. You should have already done that, okay? If you do it the way that I show you later in the video, you will have that done by the time you get to that working. And then corporation tax of €8,000 will be provided for. They have to pay corporation tax. They haven't paid it yet, so it's going to go in at the bottom of your profit and loss account, and then it's going to go in again. You haven't paid it yet, so you still owe it, so it's going to go in as a current liability. Okay, so we're going to go through the workings now. Okay, so we're ready to go through our workings now, and just one thing I want to say to you is if you ever adjust a figure from the trial balance, if you're ever taking a figure from your trial balance and you're changing it, put a line through it in your trial balance so that when you're actually doing your accounts out, you know that figure is not valid. I already adjusted it in my workings, and make sure you're obviously putting in the correct figure then into your actual accounts. Okay, so looking at the first working, this is where it says that the finished good items which cost €5,000 to produce now have a sales value of €3,000. So what you need to do there is take your stock of finished goods, which is €90,000. You need to take out the value that they used to be. So you're taking out the 5,000 and you're adding in the €3,000, which leaves your stock at €88,000. And I don't mind that line going through there. All that means is that I adjusted it again, okay? And you should be doing that as you go through. So if you ever get a figure and you end up adjusting it further down the question, put a line through what you used to your old figure, okay? So then you know when you're doing your accounts, just like what I said about the trial balance, That's not valid. We adjust it again. Okay. At this point, you should be labelling closing stock of finished goods goes into the current assets in the balance sheet, and it also goes into the trading account. So finished goods stock is the only one that goes into the trading account. The other two go into your manufacturing account. Okay. Next working is working number 2. It's patents. Okay. I already explained patents are being written off over 6 years, which commenced in 2006. Our year end is 2008. Okay. So writing off started in 2006 for 6 years. It's now 2008. So there's only 4 years left. So make sure you're not dividing by 6 years. You need to be dividing by 4 years. So the 60,000 for patents, I'm getting that figure from the trial balance. So anywhere where you see TB, that means trial balance, okay? So 60,000 euro is what the patents is worth in the trial balance. I only have 4 years left to write off. So I'm dividing by 4 years, which gives me a charge of 15,000 euro, okay? And when you're doing the manufacturing accounts, okay, that will go in as an indirect cost in the manufacturing or into your factory overheads, okay? So I'll just go through that again. You're writing it off for 6 years, okay? But you started that in 2006. Now it's 2008, which means that there's only 4 years left to write off. So your value in the trial balance was 60,000 euro. You're dividing it by the 4, which means that you're writing off 15,000 every year. So in 3 more years, okay, after 3 more years of writing off, your patent will be down to 0. You won't have it anymore, okay? And then your new patents figure, you need to find your new patents figure for your balance sheet. It's your 60,000 from the trial balance minus the 15,000 that we're writing off this year, which leaves them sitting there at 45,000 euro, and they're going to go into your intangible fixed assets in the balance sheet. Okay, that's that one. Next is working number 3. This is your disposal. Okay, so you got rid of a piece of machinery. Okay, the machine had cost us 9,000 euro on the 1st of the 4th, 2005. And don't forget that they had accidentally put the 800 euro that they received for the old machine into the sale of scrap materials. So the first thing that you always do is fix the error. The majority of these Leave Cert questions always have an error. Okay, when you're doing your sole trader or your company, it's usually that they've put it into purchases or they've put it into sales. Okay, so what I did was I got my sale of scrap material, the 4,500 from the trial balance, and I took the 800 out. Okay, it should never have gone in there. So I corrected that mistake, which leaves my sale of scrap material, the real figure for that, as 3,700 euro. And that's going to go into the bottom of the manufacturing account as a minus. Okay, and I'll explain that when I get to the manufacturing account. That's step 1. Step number 2 is calculate the depreciation on the old machine. Okay, well, in the first year, okay, the machine was worth 9,000 euro. You got it on the 1st of April. Okay, the percentage that we're writing off every year is 20%, and I'm getting that from point 8 in the question. So 9,000 euro was the value of the machine. I have to write it off by 20%. The depreciation policy is to depreciate from the date of purchase to the date of sale. I only had that machine in the first year for 9 months. Okay, so 9,000 multiplied by 20% multiplied by 9 over 12. We didn't have it for the full year. So in the first year, we should have depreciated that machine by 1,350 euro. Okay, that was in 2005. Okay, then we had it for all of 2006 and all of 2007. So we had it for 2 full years. Okay, so 9,000 by 20% multiplied by 2 years, which gives me 3,600 euro. This year, which is 2008, we got rid of it. Now, what date did we get rid of it on? We got rid of it on the 1st of the 9th, okay, which means that we got rid of it in the start of September, so you only count as far as the end of August, okay? So 9,000 multiplied by 20%, multiplied by 8 over 12, which gives me a depreciation for this year of 1,200 euro, okay? You're adding these 3 figures together then to get your total depreciation on the old van. It's not even a van, it's a machine, so don't mind that there. I'm just so used to it being a van with the other questions. So 6,150 euro. Okay, so that's how much depreciation that was on the machine when we got rid of it, okay? Step 3 is calculate your gain or loss. This is where I'm going up here. Put in your formula. Your cost minus your accumulated depreciation gives you your net book value. Your sales price or your sales proceeds, okay, that's what I say there. Sales proceeds minus your net book value, which is this figure here, will give you either a gain if it's a plus or a loss if it's minus, all right? So then start filling in your formula. Cost, well, the machine cost us 9,000 euro. The accumulated depreciation I'm getting from here, Okay, how much did I write off over the life that I had it for? €6,150, which means that when I got rid of it, it was worth €2,850. We got €800 for something that we believed was worth €2,850, which means that we made a loss. We made a quite big loss, okay? We made a loss of €2,050, okay? And when it's an expense, okay, when it's a loss, it goes in as an indirect in the manufacturing account, okay? If it's a gain, it also goes into the manufacturing account, but it goes down beside where the sale of scrap material is, okay? So when you're putting this in, make sure that you don't put it in as a minus. You're going to put the €2,050 in with all your other factory overheads, okay, your indirect costs, okay? Next is that you have to get the depreciation charge for the year on all the vans, okay? All of the machines, okay? So old van, I've got van written there as well. So my old machine had depreciation worth €1,200, and that's the reason why I put the star there, because I was going to use it again, okay? So I want to know, what is my depreciation charge for the machines for this year in 2008, okay? So we had that van there, that machine. We had this €9,000 machine for 8 months, okay? So we need to depreciate it. So €1,200 is going in here. We had other machines then as well. So if you look at your trial balance, we have machines in the trial balance with a cost of €280,000, okay? I'm minusing the 9,000 from that, which means that I had machines worth €271,000 for the whole year, okay? So 271,000 multiplied by 20%, which gives you €54,200. If this was a question where you have where you got a new machine, you'd have to get the depreciation on the new machine in here as well. So if you got a new machine, just say worth €20,000, you'd be going new machine, €20,000 by 20% and multiplied by the number of months that you had it for. Okay, and then you'd be adding it in. We don't have a new machine in this one, so we don't have to worry about that. Okay, your depreciation charge then for this year, you add these two together, that's the €55,400. That's going to go in as an indirect cost in the manufacturing account. Okay, that's step 4 done. I'm now going on to step 5. Step 5 is calculate your new accumulated depreciation. So you're starting off with your depreciation that's in the trial balance, your previous depreciation, okay? In the trial balance, if you look at it, you've got a cost figure of €280,000 and you have a net book value of €150,000. So 280 minus 250 leaves you with €130,000 worth of depreciation, okay? You're adding on this year's charge, which is $55,400, okay? And you're taking all of the depreciation on the old machine away, okay? So when we got rid of this machine, all of the depreciation goes with the machine. So when you get rid of an asset, any previous depreciation on it will go with the machine, okay? When you get rid of it, all the depreciation goes with it, okay? So that's why I'm taking out the full amount here, which leaves my depreciation figure, my new accumulated depreciation figure for the trial balance as €179,250. All right. And then the last step then is find out what's your new cost. This is for the balance sheet as well. Well, we had machines worth €280,000 and we got rid of that machine worth 9,000. Okay. And that gives us a new cost of €271,000. Again, if you got a new machine, but which we didn't have in this question, you would put in €280,000 minus your 9,000 and add on the cost of whatever the new machine was worth. So just say it was 20,000, you'd write in plus 20,000, okay? That's going into your fixed assets in the balance sheet, and that's that working completely finished. So just a recap your 6 steps. First one, get rid of the mistake. Second one, calculate your depreciation on the machine that you got rid of, okay? Next, calculate if you made a gain or a loss on it. Then get your depreciation charge for this year. Calculate your new accumulated depreciation for the balance sheet and get your new cost for the balance sheet. So these 2 figures will go into your manufacturing accounts, okay? And these 2 are going to go into your balance sheet if you need to remember it that way. So working number 4 is the suspense, and it's remember we've got 2 separate problems. We're going to deal with them separately, okay? Don't try and panic yourself by trying to do the 2 of them at the same time. The suspense figure arises as a result of the discount allowed of €200 entered only in the discount account. So always do it out in T accounts so you can understand your debits and credits, and then you'll know how to correct your figure. Okay, so you always need to check and see in the trial balance what have they included suspense in? Okay, so you'll always see something and in brackets beside it including suspense, and that means you need to adjust that figure. Basically what it means is they got to their trial balance, it didn't balance, and they adjusted this administration expense so that their trial balance will look like it balanced, okay? And now you as a Leaving Cert student have to figure it all out, okay? So it says the discount allowed was entered only in the discount account, okay? So here we are, this is what they did. Discount account, okay? This is discount allowed, okay? I'll write that in there, allowed. Discount allowed is an expense account, okay? So they included it in there and that's all they did. So did their debits and credits add up? No, they didn't, okay? So that's all they did, so they didn't have a credit entry. So that's why they had to credit the suspense account, okay? And suspense is built in this question into your administration expenses. So this is an expense account, okay? So I'll just write that in as well, expense, okay? And with an expense account, when you debit it, it's a plus, and when you credit it, it's a minus, okay? So by them putting that €200 in here, they reduced their admin expenses by €200. So how are you going to fix that? To fix it, you need to put it on the opposite side, okay? So to remove this from the account, you need to put it on the opposite side, which is the debit side. And if you are debiting an expense account, that means you are adding it on. You need to add it on, okay? So that's why over here, you can see me adding in the €200, which is the discount error, okay? So that's me fixing the suspense. Now the suspense issue is gone, okay? You can put a line through that. The suspense is no longer a problem, okay? So you have the responsibility to complete the double entry, which is why this whole thing happened, okay? They never completed the double entry, so you need to do the double entry. When you give someone a discount, you're giving someone who owed you money a discount. The people that owe us money are called debtors, okay? That means we've given them a discount. They no longer owe us that €200. So I'm getting my debtors figure from the trial balance of €64,500, and I'm reducing it by the discount amount, which is €200, okay? And that leaves my debtors figure as €64,300. That's the first problem dealt with, okay? The second problem then is the posting of an incorrect figure for debenture interest paid to the interest account, okay? So what happened was we paid debenture interest, okay? And the correct figure came out of the bank account, okay? But the incorrect figure, whoever was doing these accounts, put the wrong figure into the interest account. So your responsibility is, excuse me, this is what they did, okay? They put the correct figure came out of the bank account, okay? So this is minus and this is plus, okay? The correct figure came out. The incorrect figure went into the interest account, so they didn't balance. So the first thing, you're not going to be given this figure. It's your responsibility to figure out what the correct figure is. So to do that, you need to look at your debentures. Look at the trial balance, see what it says. It says 9% debentures, and then in brackets, including 60,000 issued on the 1st of the 4th, 2008. Okay, so the full amount is 90,000, but 60,000 of that we only got in at the start of April. Okay, so you need to find out what amount of interest should this business be paying on their loans for the full year. Okay, so we got an increase in our loan of €60,000 on the 1st of April, and that brought our total loan amount up to 90,000, okay, €90,000. We only got that 60,000 on the 1st of April, so the difference is 30,000. So we had €30,000 worth of the loan for the full year. So 30,000 by 9%. We had that €30,000 for the full year, so we have to pay the full 9% on it, okay? So 30,000 by 9%, which is €2,700. We then got an increase of €60,000, and we only had that amount for 9 months. We got it on the 1st of April, which means we need to start paying our interest from April, May, June, July. You should be counting on your fingers, okay? I still count on my fingers. So 60,000 by 9% multiplied by 9 over 12, which is 4,050. So on the amount of the loan that we had for the full year, we need to be paying €2,700 worth of interest. And the increase then we should be paying €4,050, okay? So my total charge for the year is those two figures added together, which comes to a total of €6,750. Okay, and that figure should come out at the bottom of the profit and loss account. Okay, then you need to go and find out, that's the amount for the full year. Well, what is the correct figure paid for the first 3 months? Okay, and I know it's first 3 months because when you look in your trial balance, it's the second last thing. It says debenture interest paid for the first 3 months is 175. So how much do we actually pay for the first 3 months interest? Well, in the first 3 months of this year, we only had the €30,000 worth of loan. So 30,000 worth of the loan, multiplied by 9%, multiplied by 3 over 12. So the amount that we actually paid was €675. I'll go through that again, okay? It says in the trial balance that we paid interest for the first 3 months. We only had the €30,000 loan in the first 3 months of this year because we got the increase in April. So we only had €30,000 worth of a loan for the first 3 months. So you need to calculate what is the correct amount of interest that we should be paying for the first 3 months. So you're putting into your calculation 30,000 worth of the loan, multiply by 9%, multiply by 3 over 12. Or, that's what I've got written here, or you can get your 2,700 and multiply it by 3 over 12, you'll get the same answer, okay? And that answer will be €675. So I know now that the correct figure for interest for 3 months, the first 3 months of this year, is €675, okay? Now, we were told in the question that the incorrect figure for debenture interest was put into the interest account. So the incorrect figure, the figure that they had in the trial balance was €175. Okay, so the correct figure came out of the bank account, and that's the figure that I just calculated there. The correct figure came out of the bank account. The 675 came out of the bank account. Only €175 went into the interest account, and that's why the debits and credits, I'm just going to cover that over. That's why your debits and credits didn't work. We had a debit entry of 175 and we had a credit entry of 675. Okay, didn't balance. So they had to shove some number in to make their trial balance work. Okay, and what they did was they opened up a suspense of €500 on the debit side. Okay, so then that made it add up. You've got 675 here, and then on the credit side, and you have a debit now of 175 in your interest account and €500 in your suspense account. So how are you going to get rid of this? Okay, how are you going to do that? You're going to need to put it on the other side, and that's why I've got the 500 there. So to get rid of this 500, you need to put it on the opposite side. Okay, again, as I said up here, okay, when we went through the last problem, this suspense is an expense account. It's shoved in with the administration expenses. Okay, so the rules of an expense account is debit is an increase. Debit is increasing and credit is decreasing. So by them putting the €500 on the debit side to fix the problem, they actually increased our administration expenses. So when you're fixing it, you need to put it on the opposite side, which means you need to decrease it. So that's why up here now I have debenture interest error minus €500. And that's that working done. All you need to do is fix this, okay? So total it up, and you should get that your correct administration expense figure is €22,100, and that's going to go in as your expense figure in the profit and loss account, okay? So that's that working done. Basically, before they realised they'd made all these mistakes, your administration expenses were sitting in your trial balance as 22,100. And then they figured out their trial balance didn't work and they started changing this, okay? And that's how it ended up as 22,400. So we've just fixed it now and it's back to its original state, and we fixed all the problems throughout the rest of the question, okay? And that's that working done. The next working is point 5. It says a bad debt of €500 should be written off, and then it tells us about the provision. But I already said when I was going through the question, we need to leave the provision until the end. So all we need to do here is record the bad debt, okay? A bad debt is when someone who owed us money has now gone bankrupt. We will never see that money. So that's an expense to us, okay? So what you need to do is you reduce the debtors, and my debtors figure is coming from working number 4, which is just the last working that I did, suspense. So I'm adjusting that figure. So the €64,300 is coming from the previous working, okay? €500, we're never going to see it, okay? So it's an expense to us. Take it away from your debtors. So you're removing the €500. That's no longer owed to you because we know that person's no longer in business or whatever the case may be. So that €500 is an expense to us, and it's related to selling, okay? Because it's someone that we've sold stuff to that we're never going to get the money from. So I'm reducing it by 500 and I'm putting it in as an expense. So in your selling and distribution expense, you're just going to write bad debt written off, okay? And that then leaves your debtors figure as €63,800. And the line is through it because I adjusted it again. So as you can see, we've adjusted this a good bit in this question, so there'll be a lot of marks going for that, okay? So that's all you need to do. Get rid of the bad debtors, we're never going to see it, and record it as an expense. And I'm written here, leave provision until the end. Okay, when you're doing your leaving cert, you don't need to do that. Okay, next working is working number 6. It is a sale or return. So it was discovered that goods which cost the firm €6,500 to produce were sent to a customer on a sale or return basis. So we sent them these goods. If you kind of think of it like samples, it's like sending them a sample, but we accidentally recorded it as a sale, okay? But the sale didn't actually happen. You cannot record the sale unless it's actually happened, okay? So the goods that we sent to them cost us €6,500 to produce. That means that's the cost price, which is 100%. Be careful. Sometimes we're given the cost price, sometimes we're given the selling price. If you're given the cost price, you need to calculate the selling price. And if you're given the selling price, then you need to calculate the cost price. So you'll always have to calculate one. In this question, you've been given the cost price. So the cost price, it cost us €6,500 to produce them. That's representing 100%. The selling price is 120%. It said they were charged to the customer at an error at cost plus 20%. So our selling price is cost, which is 100, plus 20%, which is 120%. So into your calculator, put 6,500 divided by 100 multiplied by 120, and you should get €7,800. So to do this working, you need to undo the sale, okay? So you undo it by you're taking out the sale, you're undoing it, €7,800. So you're taking your selling price away from your sales and away from your debtors, and then you're adding it back into your closing stock at cost price. So the 7,800 is coming out of sales, you're undoing the sale, and you're undoing this. They don't owe us that money. All we did was send them a sample, okay? They don't owe us money for that, okay? The sale didn't actually happen. So you can't record the sale, they don't owe us the money. So you're undoing that. We still own that stock. We haven't sold it yet, so it's going back into your stock of finished goods. Make sure you're putting it into stock of finished goods, not into raw materials, because we sent them finished products, the finished tables. We didn't just send them wood, okay? The €88,000 is coming from working number 1, which is the very first working we did where we had that damaged stock, okay? And that's that working complete. Next one is where we have an extension. Okay, we built an extension to the warehouse and we got our own workers to do it, okay? So we got our own workers to do it and we used our own materials, okay? So if we used our own workers to build an extension, it can't be included in the normal wages, okay? So it says the cost of their labour, €17,000 is included in factory wages, okay? It should not be included in factory wages if they were building an extension, okay? So I'm taking the €17,000 out of wages and I'm adding it into the buildings, okay? Because that was used towards building a fixed asset, okay? So when you're building a new fixed asset, you can add it into the cost, okay? And then similarly with the purchases, okay, we used our own raw materials to build the extension, okay? So you're getting your figure from purchases and you're taking out the €33,000 and we're given that figure in the working, okay? It says the materials costing $33,000 were taken from the firm stocks. So you're taking the 33,000 out and you can add that to the value of the buildings, okay? So the value of the extension is your 33 plus your 17, okay? So that is your €50,000, okay? So the value of the extension that we actually built was €50,000 and that's coming from €33,000 worth of purchases and €17,000 worth of wages, okay? Another way this can come up in this question is that it might say repairs to a building. If it's repairs, you cannot add repairs into the value of the assets, okay? You can only add it into the asset if it's a new building, okay? Or a new extension or a new warehouse. You cannot add it if it's just a repair, okay? If you're building something new, you can add it to the asset. If it's just a repair, it's just an expense, okay? So just be careful of that one. You need to create a separate expense though. So you might be told repairs worth €2,000, were done on a building, okay? So that was a bit of, again, it'll be this thing again. So you're going to take your purchases out, you take your wages out, and you just create a new expense, okay? You don't add it in here. So just be careful of that one, okay? The next one then is depreciation. It says depreciate factory buildings at 2% of cost, okay? So and then we have to do a revaluation, okay? So what you need to do is get your buildings figure, and my buildings figure is literally coming from here, okay? So make sure it's your most recent buildings figure, because when you adjusted this, you should have put a line through it in the trial balance anyway, so you'd know that's not my most recent figure. So my plant and machinery is done in the disposal working, so I'm going on to buildings, okay? So buildings from working 7, that's the figure that I just told you. We have to depreciate by 2% of cost at the end of the year, okay? And the cost of the value at cost was €575,000. I'm getting 2% of that, which is €11,500, and that's going to be my indirect expense in the manufacturing account, all right? Then you add on any previous depreciation. In this question, you have €525,000 in your cost, okay? And you have a net book value, which is sitting in the actual trial balance as 480. So the difference of those two figures is your accumulated depreciation. So the buildings cost is 525. They're now only worth 480. So the previous depreciation is €45,000. You add those two together, and that gives you a new accumulated depreciation of €56,500. Okay, and that's where you should do this part first. So always do this part first. Don't worry about the rest of it. That's your depreciation part. Okay. Then we're told that the company have decided to revalue the buildings at €600,000. Okay, so the new value of the buildings is 600,000. Okay, so the first step in doing that is checking to see how much are we going up by. Okay, so the current value of the buildings is €575,000. We're increasing that amount to €600,000. Okay, so in your balance sheet, you're going to put in your new figure, which is €600,000, and that's your fixed assets in the balance sheet. That's step one. The next step is when you revalue an asset, all of the previous depreciation gets brought back down to zero. Okay, so my previous depreciation, which I've just calculated, my new accumulated depreciation was 56,500, but we're revaluing it now, so it gets brought back down to zero. So in your balance sheet, you're going to have €600,000 in the cost section. In your depreciation, you're going to have zero, and in your net book value, you're going to have 600,000. Okay. So you can't just take it away and do nothing with it. You need to open up what's called a revaluation reserve. And in your revaluation reserve, you're going to put the increased amount, which is €25,000. Okay, so you can see that there. €25,000 plus all of my previous depreciation, which is €56,500. So you add those two together, and that brings my revaluation reserve to €81,500. Okay. And that's going to be shown in my finance by section in the balance sheet. Okay, and you're going to add that in. Okay, so the first thing you need to do is get the depreciation charge for this year. So don't worry about this. Just get your depreciation charge this year. Follow your typical steps, even if you would do this if there was no valuation reval. Okay, so get your charge for this year, add on any previous depreciation, and that will get your new accumulated depreciation. Then you're told we're going to have to do a revaluation. Check and see how much you're going up by. Current value is 575,000. My revaluation amount is 600,000, which means I'm going up by €25,000. When you're doing a revaluation, you have to bring all of your depreciation back down to zero. Okay, so that has to be shown in the revaluation reserve. Open up your revaluation and you put in your increased amount plus your previous depreciation, and that will give you your revaluation figure of €81,500. Okay. Then you have working number 9. It says the directors are proposing that provision should be made for debenture interest due, which we already did in our suspense working. Okay, and then you're told the corporation tax of €8,000 be provided for. So it's taken out at the bottom of the profit and loss. Okay, so that's why I've got a minus there. And you also need to put it in as your current liability in the balance sheet. The only other thing that you are yet to do is your provision for bad debts, because I told you wait until the end. The reason we waited till the end is because we adjusted debtors so much in this question. We actually, if you were to do your provision at 0.5, it would have been wrong, because in 0.6 we ended up actually adjusting the debtors again. So always wait until the end to do your provision so that you know you're using the correct debtors figure. So here I am getting my debtors figure from point number 6, okay, working 6 in my workings, €56,000, and you're multiplying it by 5%, which means we are owed €56,000 from our debtors. There's a chance that 5% of those will not pay us, okay? This is coming from the prudence concept, okay? So we're erring on the side of caution. We're saying that there's a chance that we will never see €2,800, okay? So that you're going to reduce your debtors figure in your current assets in the balance sheet. So when you get to your balance sheet, you're going to have debtors of €56,000 minus your provision for bad debts of 2,800. In this, we are actually creating the provision. There's never been a previous provision, but always check and see if there has been a previous provision, okay? So there's not in this one, which means that we're increasing by €2,800, and that's going to be a selling and distribution expense, okay? So when you're increasing, it's a selling and distribution expense. When it's when it's decreasing, then it's a gain, it's an income, okay? And that's all of our workings done. You're now ready to go on and start your manufacturing account. So this is your manufacturing account, and it's for the year end 31st of the 12th, 2008. So you can see there in the marking scheme, you're actually given 1 mark for writing in that heading. So it'd be silly to lose a mark for something as easy as that, okay? The first thing that you always go ahead with is your raw materials, okay? So you can see here that everything here has got to do with raw materials. You always start off with your raw materials. So your opening stock of raw materials is the first thing of €45,000. That's coming straight from the trial balance. Purchases of raw materials then, €447,250. We adjusted that a few times. The most recent one was in that extension working, okay? Then you've got carriage, that's coming straight from your trial balance, €6,300. Sometimes you don't have carriage, so always watch out for it, okay? Because it could be there and you don't want to, I know it's only 1 mark, but it all adds up, okay? Then you've got your closing stock of raw materials of €49,000. We didn't actually adjust that at all. That's also coming straight from, it's actually underneath the trial balance. It's the first piece of information we're given. Okay, so you're adding these 3 together. Okay, so you're adding these 3 and you're taking your closing stock, which gives you a cost of raw materials consumed of €449,550. Okay, then you're going in with your direct costs. Okay, so other direct costs that are directly related to making the tables. Okay, we had those direct factory wages, which also that is coming from working number 7. Okay, with that extension. So the direct factory wages of €235,460. Okay. And we've a hire of special equipment as well of €10,000. Okay, without that equipment, we wouldn't have been able to make the tables. So they're directly related to making the tables. You're adding these 2 together, which give you a figure of €245,460, and you're adding that to your cost of your raw materials. Okay, and that gives you a prime cost. So your prime cost is all of your direct costs added together. Okay, so everything above prime cost is a direct cost. Okay, because that wood, all these raw materials, your wood and your screws is directly related to making the tables, and so are our wages, okay, and so is that special equipment. So the hire of special equipment is needed to make the tables. So our prime cost is €695,010, okay. Then you're going in with your factory overheads or your indirect costs, okay? Other things that we have to pay for in the factory or that are related to the factory but aren't directly related to making the tables, okay? So first thing is your general factory overheads. We didn't have to adjust that. That comes straight from our trial balance, okay? Then we've got our patents written off figure of €15,000. That's coming from working number 2, okay? We're writing it off by €15,000, okay? Then we have depreciation of our factory buildings. That's 11,500. Okay, as soon as you see factory, you should know that it's going into your manufacturing account. And you also have your depreciation on your plant and machinery. Okay, your depreciation on plant and machinery and all that is used in the manufacturing element of the business. It's used to make the tables, so that's why it's been shown in our manufacturing account. Then we have our loss on the sale of the machine. Okay, so remember when we were actually doing this work and I had a bracket around it, and I only had the bracket on it because of the formula that I was using. So be careful. Some people in my class ended up having a bracket in here, but that's wrong because then they were taking it away. It's a cost. It is another expense. So you need to add it in with all the other costs. So make sure you're adding it in. Okay. So 2,050. Okay. And that's bringing your total indirect cost to €144,150, and you're adding that. Okay, you're still adding all of these costs together, so you're adding it to this figure here, 695, which brings your factory cost to €839,160. Then you go in with your work in progress. These are the tables that were half made, okay? So at the start of the year, we had tables worth 21,250 euro, okay, at the start of the year. They were eventually turned into finished tables, so they're no longer a work in progress. So I'm adding that in. It costs us that money. And then we have tables that were still in the process of being made. You have 26,450 euro worth of tables that are kind of half made at the minute, so they can't be included in there, okay, because they weren't actually sold this year. So I'm taking them out, the 26,450. Okay, then you've got your sale of scrap material. We had pieces of wood lying around the place and we ended up selling it. So that's going to reduce my cost. Okay, I'm reducing my cost by 3,700 euro. So make sure you're subtracting that figure. Okay, all of the rest of them are costs. So make sure you're subtracting this. Okay, and as I said earlier on in the video, if you were calculating a gain on disposal, that's where it would go in. You'd have it in here, okay, down the bottom. So you'd have gain on disposal underneath your sale of scrap or above it, whichever, okay. That's bringing us a cost of manufacture then to 830,260 euro. And that's that account done, okay. In some of these questions, it doesn't come up that often, but you could be given a current market value. If you're given a current market value, you skip a line and you put in here current market value, right? And just say it's 1 million, okay? Okay, then you would work backwards. You put into your calculator 1 million minus your 830 to 60, and then you'd go in between it, you'd write profit on manufacture. And you put your answer here. Okay, so make sure if you're given your current market value, that's what you do. Okay, and if you are given a current market value, you don't put your cost of manufacture, you don't carry that over, you carry over these two figures, your profit and your current market value. Okay, the next account then is your trading profit and loss account. Your trading profit and loss account is also for the year ended 31st of the 12th, 2008. You've got a sales figure of 1,077,200 euro. That figure, we adjusted that. We definitely adjusted for a sale or return basis, okay? So that's coming there. You're getting 4 marks for that. Then you've got your less cost of goods sold, or less cost of sales is what I would usually say. You're putting in your opening stock of your finished goods, 84,500, coming straight from your trial balance, 2 marks for it. Add your cost of manufacture. So that's this figure here, 832.60. That's going in there. Okay, 832.60. All right. You're adding those two figures together and you're taking away your closing stock of finished goods, which is 94,500 euro. We adjusted that a few times as well. Okay, we definitely adjusted it for our sale or return basis as well. That's meaning the cost of the tables that we sold was 820,260 euro. So this figure here. And you're taking that from your sales. Okay, so we got 1,077,200 euro for selling them, but it cost us 820,260 euro, which means we're left with a gross profit, okay, a profit before all the other expenses of 256,940 euro. Then you're going in with your expenses. You've got your administration expenses. That was the suspense working. So you can see there you've got 6 marks for that. So that's the only admin expense, okay? So you can see any of the figures that we had to do a bit of work for, they're worth a lot more marks. Then you've got your selling and distribution expenses. Selling expenses is coming straight from the trial balance. We didn't do anything for that. Then we've got our bad debt written off. So your bad debt written off is the bad debt you'll never actually see, okay? We'll never see that 500 euro. Then you've got your provision, and that's coming from the very last working. It's the increase in the provision of 2,800 euro. And they're two different things. This 500 euro, that is a bad debt. It's after happening. We're never going to get that, okay? We're recording it as an expense. The other is the provision. We're setting money aside, okay? So you need to be careful that you don't get confused between a bad debt that's actually been written off and the provision, the increase and decrease in the provision. They're two separate things. So you're adding those 3 figures together to give your total selling and distribution expenses of 108,465, and I'm adding that to my administration expenses, which gives you the figure of 130,565 euro, and you're taking that from your gross profit. You are left then with a figure of €126,375, and then you're putting in any other operating income. Okay, we have discount, which is sitting in our trial balance. I highlighted it when I was going through the trial balance at the start of the video. Okay, so the discount is on the credit side, so it's discount received of €3,000, so you need to add that in. Okay, and then you're left with €129,375. Okay. You're then taking away your debenture interest, which I did as part of the suspense working. You're taking away your total for the year, which is €6,750, and you're left then with your profit before tax of €122,625. After your profit before tax, you're putting your tax in, which is just given to us at the bottom of the information underneath the trial balance, €8,000. Okay, that's your profit on your taxes. Sorry, your taxes on your profit. Okay, and that leaves you with a profit after tax of €114,625. Okay, that's it there. Then you need to take out your dividends. Less dividends paid of €40,000, also coming straight from the trial balance. Okay, it's an easy 2 marks there. Okay, so they had profit from operations was your 129,000. Then they had to pay interest on their loans. Okay, that can't be included in the standard expense because it's a financial expense. It's not an expense that they have incurred through the running of their business, so it has to be taken out separately. After they take out that, they need to take out tax. Okay, after tax, they pay their dividends. Okay, and then what they're left over with is what's called your retained profit. So your €74,625. That's the amount that they have left to keep themselves after they've paid their tax, after they've paid the dividends, after they've paid the debenture interest. Okay, you could end up having investment income in there as well, and if you did, you'd put your investment income around the same place where you put your debenture interest. It's not, you don't put it in with your other income. Okay, you're adding your profit and loss balance from the start of the year, which then gives you your profit and loss balance at the end of the year of 150,025, and then you're ready to go on and do your balance sheet. Now, so we're looking at the balance sheet. I actually cut off on my screenshot. Your heading should be balance sheet as at the 31st of the 12th, 2008. So make sure you've got your proper heading in, and you're getting a total of 45 marks then for the balance sheet. Okay. The first thing is, now when I'm teaching this, I'd put the tangible fixed assets first. Okay, so that will get rid of your fourth column. So try not to worry too much about this whole fourth column. Okay, so the way I would do it is I'd have my tangible and then my intangible, but we'll go through it this way anyway. It doesn't make a difference. Okay, so I'll go ahead with the way it is in the layout. So you've got your patents figure, and it's your €45,000, which is your new patents figure, which is coming from our workings. Okay, so it's the 60,000 minus the 15, which is your €45,000. Okay, then you've got your tangible fixed assets. So these are the fixed assets that you can see and you can touch them. So they're the physical assets. Okay, a patent isn't a physical asset. So your factory buildings are going in at the revalued amount. So this is what I said earlier in the video. It's a 600,000 minus nothing. So you've got no depreciation, because once you revalue an asset or you revalue your buildings, all of the depreciation goes back down to zero. So that's why I've got nothing, and it's leaving my value of the buildings at €600,000. Okay, plant and machinery, this information is coming from that disposal working, so the big working. Okay, you've got 2 marks going for your cost of 271,000 and 3 marks going for your accumulated depreciation of 179,250. So there's an awful lot of marks going for that working, because sale of scrap was affected, you've got your gain or loss, you've got your charge for this year, and then you've got your cost and accumulated depreciation. So you could be talking up to 20 marks for that working. So it's really important that you know what you're doing. Okay, your net book value then is your cost of 271 minus that 179,250, which is your net book value, what they're actually worth now, as €91,750. And you're adding those two together to get your 691,750, and you're adding that then to your patents figure of 45. Okay, you're adding them two together to give you this figure here of 736,750. Then you're going in with your current assets. You're starting off always with your 3 stocks, your raw materials, your work in progress, and your finished goods. Raw materials and work in progress, we did not adjust, but finished goods we did a few times, okay? So this figure here is coming from our workings, okay? You're adding those three together and you're bringing your total out. You don't have to do that if you don't want to. You can just put all these three in that column, okay? Might save you a second or two. Then you have your debtors, okay? You're showing your debtors figure of €56,000 and you're taking away the provision. You do need to step this one in, so make sure you always have this in the inside column. So your €56,000 is your debtors figure. You've created a provision, which means that you're saying there is a chance that we will never see €2,800 worth of that money, okay? So you're showing your realistic amount, okay, the amount that you actually think you will receive, which is your 53,200. And you're adding that then to the rest of your stocks. That's the only current assets you have in this question. You're adding them out and you're putting it out into the following column. I would put that underneath here, but don't worry too much about it, okay? Next is your current liabilities, but you need to be using the correct heading, which is creditors. So creditors is someone that we owe money to. The amounts falling due within 1 year. So all of these things are things we need to pay within 1 year. We need to pay our creditors €55,600. We need to pay our bank with 10,300. That figure there is coming straight from the trial balance, okay? You're getting 2 marks for it. VAT also coming straight from the trial balance of €8,400. Your debenture interest due, that's coming from the suspense working, okay? Your tax due, that's coming straight from the workings. Well, you didn't actually need to do a working for it, but you need to pay that tax, okay? That's your corporation tax of €8,000. You're adding these 5 things together, and that's giving you 88,375. So within 1 year, we have this amount coming in and we have to pay this amount, okay? So that's good. You always want these assets to be higher than your liabilities. So after paying your short-term debts, you are left with this figure here, which is called your working capital of €134,775, okay? And you're adding that figure. So make sure you're always adding it to this figure here, the amount that you have above it. And that's giving you your total net assets of €871,525, and that's the value of the business as at this date, the 31st of the 12th, 2008, okay? That's the value of the business. The second part then of the balance sheet is financed by. Well, where do they get the money from to have this business, okay? Again, you're going in with your heading, creditors amounts falling due after more than 1 year, okay? So what do you need to pay back after 1 year? Long-term liabilities. You might see me writing in a trial balance, LTL, long-term liabilities. This business have a loan. They have a debenture, okay, and you're actually putting the debenture amount. So it's the debenture amount, not the interest amount. So the debenture is €90,000, okay. They also have shares, okay. They've sold shares in their company, okay. So we're going shares. We've got our authorized amount and issued amount. So you're getting 1 mark to put those authorized amounts in. That's coming from the top above the trial balance. I went through them at the start of the video as well. You need to close off the €800,000. That's not going any further, okay? So make sure you put a double line underneath it. Our issued amounts then, that's the figure that we're carried on with. Of our ordinary shares, okay, we have €350,000 issued. And of our preference shares, we have 200,000 issued. So that's bringing my total shares amount to €550,000. We also have the revaluation reserve of €81,500 and the profit and loss balance of €150,025. Okay, you're adding these 3 together then, okay, and that brings that figure out of 781,525, and you're adding that to your loan of €90,000, and that will give you your capital employed, the figure that we're looking for, our balancing figure of 871,525. So that is this question completely finished, the 2009. You should be doing this question in about 55 minutes. So you really need to practice to make sure you're getting your timings right.